Think back to how investing used to be. It was all phone calls to a stuffy broker, clunky desktop software, and, oh yeah, fees for pretty much everything. Now, we've got these incredibly powerful trading platforms living right on our phones, giving us amazing tools with just a few taps. So how on earth did we get here so fast? To figure that out, we're going to dissect one of the key players in this whole FinTech revolution.
So for this explainer, we're putting Webull right under the microscope. It is the perfect case study for understanding how these new wave financial technology companies are actually built, how they make their money, and, how they've completely changed the game for the everyday investor. So here's the game plan. First, we're going to look at the basic anatomy of a modern fintech broker. Then we'll trace Webull's super fast rise from just a startup to a publicly traded company. After that, we are going to decode its free trading engine, explore the pro-level tools it puts in everyone's hands, and finally, we'll ask the big question: what does this all mean for the future of investing?
All right, let's get started. We're going to pop the hood and see how an app like this is actually built. You've basically got three core layers. First, there's the user interface. That's the slick, mobile-first app you're swiping through on your phone. Second, you've got the brokerage layer, the part that handles all the serious regulatory stuff and connects to the markets. And third, the revenue engine, the business model that, keeps the lights on. We're about to see exactly how Webull pulls all these pieces together.
First up, their origin story. And let me tell you, Webull's journey wasn't some slow, steady climb. Nope, it was more like an explosive ascent from a simple idea to a major force on the NASDAQ.
Let's just walk through this timeline, because it's pretty wild. It all started back in 2016, and not even as a broker, but as a mobile app giving out free market data. Just 2 years later, bam, 2018, it launches US brokerage services. By 2023, it makes a really strategic move and spins off its crypto business to deal with all the regulatory uncertainty. And according to their plans, they're set to hit the public markets in 2025 by merging with a SPAC. I mean, that is an incredibly fast evolution.
So you might be wondering, what on earth is a SPAC? Well, to put it simply, it's a blank check company. It raises a bunch of money from the public with one single purpose: to find and merge with a private company, just like Webull, and take it public. You can think of it like a shortcut to the stock market. It's often way faster than a traditional initial public offering or IPO. Okay, this brings us to the absolute core of how these platforms work. I mean, if you're not paying a commission fee on your trades, where is the money coming from? Let's follow the cash.
This really is the million-dollar question, isn't it? It's a puzzle for so many new investors. You're buying and selling stocks, and the app is screaming zero commission. So how is the company behind the app even staying in business?
Well, the primary answer is a little something called payment for order flow, or PFOF. Here's how to think about it. When you place an order, Webull basically acts like a travel agent for your trade. Instead of handling it themselves, they send it to a huge wholesaler of stocks, what's called a market maker. And that market maker pays Webull a tiny fee for sending them the business. Now, you multiply that tiny fee by millions and millions of trades, and suddenly it becomes a massive revenue stream. It is a volume game, pure and simple.
And just how big a deal is this? Well, in 2024, payment for order flow made up about 51% of Webull's total revenue. Yep, you heard that right. Over half their money comes from this model. The rest comes from things like interest on customer cash balances and margin lending. But PFOF is clearly the main engine powering this whole thing.
But here's something that's really important to know. This free model isn't universal. PFOF is super common here in the US, but it's actually restricted or even banned in other countries. So when Webull operates internationally, its business model has to change, and they often end up charging direct commissions, just like a traditional broker would.
Okay, so we get how they make money. But why are users flocking to the platform in the first place? Let's switch gears and focus on the user experience and the value they're actually offering.
You see, Webull spotted this huge gap in the market. On one side, you had the old guard, the traditional brokers with really powerful, but let's be honest, complicated tools and pretty weak mobile apps. Then on the other side, you had that first wave of super simple fintech apps that were awesome on mobile, but really lacked any deep analytical tools. Webull wanted to build a bridge right between those two worlds.
And that brings us to their core value proposition. They offer what they call pro-grade analytical tools to everyday investors, and they do it all within a mobile-first package. They also throw in community features to create a sort of virtual trading floor, give you extended and even 24-hour trading access, and of course they anchor the whole thing with that zero-commission model we just talked about. You know, a quote from one of their own filings just perfectly captures their entire strategy. They see their platform as something users, quote, graduate into as they become more informed. They're not just going after the absolute beginner. They are targeting that digitally savvy investor who's on average 37 years old and is ready for more powerful tools.
So the big question is, did this strategy work? Oh yeah. The numbers tell a pretty clear story about the kind of impact this model has had on the market. Let's just do a quick fire round with the results. First number up, 25.9 million. That is the total number of people who have registered for an account on their platform. Huge.
Next up, 4.93 million. So, out of those almost 26 million people who signed up, this is the number who have actually funded their accounts with real money.
And the final massive number, $21.2 billion. As of late 2025, that's the total amount of customer assets on the platform. I mean, clearly, this is not some small niche player. This is a major force in retail finance. So what's the big takeaway from all of this? Well, it's that platforms like Webull, powered by business models like PFOF and a laser focus on mobile-first, pro-level tools, have fundamentally democratized access. They've completely changed not only who can participate in these complex financial markets, but how they do it. And that leaves us with one final big question to chew on. We've gone from paying crazy high fees for basic trades to having professional-grade tools right in our pockets for free. As this kind of technology becomes the new normal, what's the next frontier for the retail investor? Is it going to be AI-driven advice, full integration with all of our daily finances, or maybe something else we can't even imagine yet? One thing's for sure, this revolution is far from over.